Thank you for tuning into the All Funds Investment Podcast. This conversation is with Julian Quan, CEO and co-founder of both InvestaX and IX Swap. Julian takes us deep into what's happening with real-world assets. There's a few abbreviations that I want to clarify before we jump into it. RWA stands for real-world assets. STO stands for security token offering. IPO is initial public offering. ICO is initial coin offering. Feel free to reach out if you have any questions for us or for Julian. We'll have him back on in the future to continue this deep dive. Just a reminder here that nothing said is legal, tax, or investment advice. Check out the full disclaimer below in the description. We hope you enjoy this conversation. Please like and subscribe if you find this information helpful, and check out the links below to connect with us and Julian. Julian, we hear a lot of, I've heard it from a lot of large institutions that are really interested in RWAs. What's the hype? What's going on?
Yeah, I think the recent RWA push is what I'm seeing is a lot of, well, it's a combination of, securities tokens in terms of, the underlying assets are actually securities, and commodities tokens, which are not securities. So if there's the market is, evolving, and there's different people, products, platforms doing different things. Obviously, the ones doing the security tokens without licenses are doing it illegally, but that hasn't stopped anyone in blockchain before. And it's also different in different jurisdictions, right? So I think carbon credits is a good example. In some countries, they're classified as commodities, and in other countries, they're being classified as securities. So there's all of that happening. But look, at the end of the day, I think the reason it's happening is because we've had kind of 5 years of platforms like ourselves and other groups around the world who have been getting licenses to use blockchain to wrap real world assets. And that's taken literally 3 to 5 years. Since 2018, I think, was when the first security tokens came out. So now the infrastructure is laid, you're seeing a lot more use case. On top of that, I think we had the DeFi meltdown, lending, borrowing, staking of, non-asset backed tokens. And obviously super innovative, super interesting, works while it's going up, and massive implosion when it's coming down. So we've been looking at using, bringing in, let's just say, adding lending, borrowing, staking to the asset-backed token world for the last year or two. And so I think there's a combination of that happening as well. People saying, well, as well as, I think, so there's the DeFi side of things, and then there's also just the natural evolution of, maturation of marketplace, people understanding crypto is not security tokens, like there's the separation, every institution now getting on board, JP Morgan, BlackRock, etc., building their own platforms. And also, lastly, I'd say there's been a much wider adoption and acceptance that public protocols can be used to issue security tokens and real world asset tokens, and you don't have to use some private chain that no one else is connected to. So there's multiple factors, and it's evolving every day. So I don't know which ones are the main drivers, but I guess a combination of all that.
Yeah, there's a lot going on, it sounds like, which is very fascinating, right? As you mentioned, 6 years ago, obviously people were talking about it, but it was kind of a slow slog, if you will. Maybe this is a good segue too to kind of talk about your journey from when you started at your platform, a little bit of your introduction and background as to kind of how you got into the space, what's been interesting, what's been some challenges, along the way, and where do you see some opportunities?
Sure, yeah. We started one of the first real estate platforms back in 2015-16 in Singapore for global assets, and did about 30 deals, and realized at about the same time that the ICO boom happened, that first generation of P2P crowdfunding platforms, whatever you want to call them, they were very low technology. So behind the websites, people are signing pieces of paper, and that's the end of the deal. So it was certainly, I call it a 0 to 0.2 value proposition, because people are investing around the world. There's smaller amounts of money. All these things hadn't really been possible before, but it wasn't like kind of the 0 to 1 shift. So our journey started in 2017. We saw the ICO boom, the initial coin offerings. Bought one, sent one to myself, whatever it was. Thought, okay, this is the technology we thought, or we needed 2 years, 3 years ago, but it wasn't around. And so this is what we should be using to tokenize real assets, shares of everything. In a world of digital currencies, you're going to want a world of digital securities. And then you're going to have a whole new world of investment products and new assets and this whole explosion of value, which has been proven in kind of public markets over the last 30, 40, 50 years. When these new technologies come to marketplaces, you have this whole new surge of growth, whether it's ETF structures or electronic trading and all this kind of stuff. So thinking about kind of the private markets, which we've been focused on for a long time, the real estate and all that, nothing really changed besides DocuSign over the last 50 years. So, and a few of these kind of crowdfunding platforms. So we went full tilt, ran around to about 500 crypto events in 2018, got laughed out of a lot of them talking about security tokens by all the crypto guys. And then you also had the, who thought equity was stupid or whatever they were thinking was kind of madness, but they all wanted sort of the no rules, the pump and dump and all that kind of stuff. But anyway, at the same time, you had the birth of that industry, and it was very difficult because the SEC was chasing these ICOs around who were definitely looking and feeling like they were issuing securities and saying, oh, those guys are getting a huge fine because that looks like a security token. And everyone's like, oh, security tokens are illegal. I was like, no, security tokens aren't illegal. That offering's illegal because they didn't follow the rules. So you can't just say a security is illegal. It doesn't make any sense. How it's handled, issued, traded, custody, that could be illegal, and therefore it is. So mad confusion around the space, and then a lot of people just not having a clue, just misunderstanding that no separation between crypto and security tokens. And it was like we'd have conversations with the most sophisticated companies in the world, and like, okay, you guys did the Bitcoin real estate. It's like, what's Bitcoin real estate? They're like, oh, I don't know, whatever you're doing. It's like, that doesn't make any sense. Like, so this just went on and on. So all these projects in 2018 were terrible. They were either failed ICOs or they were like really, really bad security tokens. And the other major issue in the industry was the guys capturing all the money, as in the VC money, were the token issuance companies, which were just the tech guys. So if you looked at their websites, they went security tokens and global distribution and liquidity and all this amazing stuff. They can't actually do any of it. They just did the token issuance. So they were massively misleading the market, although I think most of them thought they could plug into all of these other custodians, exchanges, and brokers. Problem is, us and everyone else was trying to get these licenses, which don't happen overnight. So that 2018 to 20 wave was very circular in terms of people were like, well, hang on, I've paid all this money to tokenize it. Where does it go? And then you had the token issuance guys telling clients, oh, well, we're going to be the standards for the exchanges and we're going to set the smart contract protocol. So it's going to be us. And it was like, why would it be you guys? You guys are the tech company. It's going to be the exchanges and the brokers who have done all the heavy lifting, who have to, apart from doing the heavy lifting, have to report back to their regulators. And it's not going to, they're not going to point to you and say, oh, these guys have got it covered. This is not how the world works. But anyway, that's what happened. We evolved. We got to kind of 2020. We started seeing the first security token exchanges, which is the next piece of the next infrastructure that came. And that had issues. What are the issues there? Chicken and egg, brand new marketplaces, no liquidity. A lot of them built their own private blockchains. Our position personally and for our company is, the power of blockchain is on public protocols. That's where all the digital assets are: Bitcoin, Ethereum, altcoins, NFTs, DAOs, stablecoins. Nothing worth anything is on a private chain. So if you've gone and built your own private chain as a security token exchange, slightly better. It's the 0 to 0.2 value proposition from a paper exchange, but you're not really changing the game so much. But anyway, a lot of people did that. A lot of those exchanges didn't want to focus on the primary. 99% of issuers of security tokens wanted money on the primary. And then that was 2020 to 2022. Obviously, we went through the COVID drama, which put everything up in a spin again. So we all lost a year or two there, I think. Anyway, 2023. There were no custodians back in 2018, 19, 20. I think the first one started coming in 2021. So ironically, what was needed most came last, right? And so the custodians were either custodying crypto, not allowed to do security tokens, and the traditional guys didn't have the tech. So there was literally no one to custodize. There was no market making. And so evolution till today, 2023, there's a lot more security token custodians because we went from 0. So, a handful is much better than 0, but now there's banks offering it. There's a lot more broker dealers with the tech. There's a lot more exchanges. So now we're in a sort of 5 years of trying to build infrastructure that's needed to get these things off the ground. So you can see an end-to-end system in place, which now that you can do that, much higher quality issuers and bank, private equity, real estate, they're starting to issue because it's all pretty obvious that digital is better than paper, but I'm not going to do it if there's no system, there's no license, or you can't answer all my questions. So now the questions are, let's call it, you can answerable from a life cycle perspective. And companies like us, we wanted to build a one-stop shop where anyone can tokenize anything, legally, compliantly, technically enabled, push a button, and out pops the other end, because that's what we believe 99.9% of investment managers want. They don't really care about the tech. They don't really understand, or really, care is probably the wrong word. They don't really understand, know too much, want to put too much energy into the tech side. They just want to know that they can issue it. There's a support line. You're reporting to a regulator. There's normal KYC. They know who owns their shares. They can take benefit of the trading and all this other stuff. So that's kind of where we went, and we added an exchange license. InvestaX, one of the first security token exchange licenses in Asia, in Singapore, and we turned that into a service as a software model, because one of the big challenges in the space is costings. So if you think about tokenizing an asset, you're basically taking a private asset and you're kind of making it public, tradable, digital, etc. Well, that comes with costs. If you think about what's happening is you're running into all these problems where you're speaking to a real estate group or an investment manager, and they say, this sounds great. And then, so what everyone was saying was like, okay, there's an advising fee and a structuring fee and a technology issuance fee, and there's a capital raising fee and a listing fee and a custody fee and a lifestyle fee. Wow, that sounded really good, and where's liquidity? Not even there yet, right? And most of them just think that that's all about liquidity. And it's not, and I'll get into that in a sec. But anyway, so we came out with this pay a low monthly subscription and try and get everyone, as many good companies as possible into the space. Co-brand a section, tokenize what you want, couple of $1,000 monthly subscription. Can't get any better than that. And we're seeing a lot more traction than that. So that was on the InvestaX side. And then on the IX Swap side, our other platform, which I'm super excited about, that is trying to add to the liquidity solution. So the liquidity, tokenizing an asset doesn't guarantee anything. A lot of people think it does. But anyway, if you think about the cryptocurrency market 2017, 18, you had, as an extreme example, you had 10 of the biggest crypto on Coinbase and Binance, trading, deep liquidity, market makers, $1 million listing fee, everything's great. Well, 10,000 altcoins sat on the decentralized exchanges, which are essentially just swap platforms. There's no order book and matching engines, but they sat there with nothing because there was no, it's like a Craigslist for tokens. There was no liquidity solution. So until 2018 came along with the Uniswap, which I think is still probably a top 2-3 innovation in DeFi, in the history of DeFi. Said, we got an idea. Let's see if we smart contracts, 2 cryptos. We'll let anyone with 2 cryptos start a liquidity pool and breathe life into that liquidity, that asset. And then anyone who comes to Uniswap can buy and sell. Anyone who has those tokens can join the pools, crowdsource market making, sharing the fees, and then bang, Uniswap trading volume went 0 to hero because there was now a market making facility on there. So when we think about our tokenization, real world assets and security tokens, we believe in tokenization of everything. We think every single government will eventually stop issuing paper shares and issue shares on distributed ledgers and blockchains because it's just faster, better, efficient, etc. And so in that case, then there's going to be millions of security tokens because there are millions of securities in the world. Now, just by the nature of that, there's no way in the world the supermajority can even fit in a centralized security token exchange. And then most of them don't even have the characteristics anyway. Your lemonade stand startup, my VC, your real estate, completely diverse. Ironically, every single person that comes to us, and there's been thousands, all think they've got an amazing asset, that there's this magical market maker out there dying to make their asset that they don't even know about. But every single company thinks the same thing. That aside, we thought, all right, could we build the Uniswap for security tokens? Could we build a platform that allowed anyone with a security token to start their own liquidity pool? This would hopefully then do something similar, maybe even better than what Uniswap did for all the crypto. So we built IX Swap, and the difference with IX Swap is, smart contract blockchain. Behind that, there has to be a security token broker and a security token custodian to have a legal pool and a legal trade. But it looks and feels like Uniswap because I think it's a beautiful platform. The UX UI is amazing, and we want to make it crypto friendly, if you will. So we built IX Swap. It facilitated the first couple of liquidity pools for some asset-backed tokens. it's built as the market maker for all the security token brokers around the world. So if you think about what I just said before, with millions of security tokens, 99.9% will want trading, but they won't belong in an exchange. So they'll sit on the OTC listing boards of security token broker dealers. And so IX Swap is built to be agnostic to all the STO platforms and plug into all the STO brokers and say, and it's just started its next partnership with the Liechtenstein STO. We're actually looking at the US market now and coming in as a tech partner and then tapping into someone else's broker dealer licenses and the as well. And it's like, if that's the case, then every single person that comes to issue a security token can say, you know, oh, where's liquidity? We can now say, oh, we've got an answer. You're the answer, and that obviously sort of is a bit of a brain mush for them to start with. But it's like, what does that mean? It's like, well, there's this system. You could take $500,000 of your real estate token and 500,000 USDC, and you can start the first liquidity pool legally and compliantly. So this is what I think is the killer application for the space. It's a little bit ahead of its time when we started 2.5 years ago. Now the MAS in Singapore, JP Morgan, because they're writing white papers on AMMs. How do we use this? This sounds like a great idea and all this. And we're like, yeah, that's fantastic. We're actually looking at plugging into an investment bank right now. But the point of it is that, you know, it allows, this is a 0 to 1, this is a 0 to 2 moment in my head, right? Like, all right, people are saying, and I know we've been talking a lot, but the last thing I wanted to say was touching base on the misconception that tokenization is just about fundraising. It's just about liquidity for these liquid assets. All right, digital versus paper 101, we all get it, faster, transparent, cheaper over time. But the real power for us and the real purpose and our mission and why we do this is, I think tokenization is about creating new investment structures. So take the broken 7-year fixed life real estate private equity fund and make it a tokenized version. And, you know, so you don't get cleaned out every time there's a real estate downturn, which happens all the time. Real estate 2.0, you know, VC 2.0. Who wants to wait 15 years for a payout in a VC fund? Like, no one. So using the tokens to create new improved investment structures for all the different industries, I think that's huge. Not many people talk about that. And then plugging into the power of DeFi, like being able to create liquidity pools with an AMM, is just, that's massive. And then, you know, lending, borrowing, staking, which we haven't even scratched the surface on yet. You know, if you can take a real estate, a VC fund's a better example because it's just so illiquid and so long-term. If you could take your $500,000 or 100,000, in this case now, probably $100 worth of your VC tokens and go and borrow, lend them and, you know, get a 5%, whatever the deal is, that's amazing, right? Because I think you guys, probably like myself, have tons of investments stuck on pieces of paper in drawers, doing nothing for years, can't get out. You know, these are all the exponential values far beyond fundraising, although most people just still turn up and think, can I raise money from, you know, stupid crypto people if I tokenize this random asset that no one cares about, which the answer is no. But yeah, so there's a lot to take in. That's been the journey, that's the mission. Yeah, excited to still be here. It's been really tough in terms of adoption and mindset, but everyone's coming in. I think tokenization, bull market, like 12 to 24 months away. Every institution kind of stampeding in late to the party, needs to work out what to do. Never get this off the ground themselves unless they're the Black Rocks. But, you know, what about the hundreds of thousands of other investment firms? And so, yeah, hopefully we're in a good spot.
There's a lot to unpack here. there's legal, there's infrastructure, there's staking. Let's start talking about the infrastructure part. Talk to us about that. You brought up custody. You brought up institutions getting into this space. What's happening? How is this building out? I want to own a piece of your real estate or a piece of your art. Walk us through this.
Yeah, so I'll give you an example just in Singapore. 2000, don't quote me on the dates. It's been a long journey. Somewhere around 2019, one startup decided to try and become the first security token custodian. Now, obviously, as the first, you take a lot of arrows in the back, and it's very painful. So, you know, they did a job. And by the way, they're still going. I think they're doing other things as well now, but I don't want to even bother naming. But the point is that the first iteration was, you know, trying to appease the regulators Because again, remember, like, well, at least the Singapore government's position, which I think is intelligent, is security token, paper security. Security is all done in reference paper. If you want to issue a security, follow the how you issue, how you trade, custody, how you advertise, or don't, whatever the rules are, KYC. You don't need new laws. We certainly need some upgrades. But the position here was like, if you want to issue a security token, I called the regulators. Hey, I don't even know if we called them STOs back then. I think we did. 2018. Hey, we want to issue STOs. What do we need to do? Is it a security? Yes. Follow your license. Hang up the phone. That was my entry into the space legally, and I was like, well, this is good. But that's not the case in other parts around the world, especially places like America, where everyone's been upping arms about all the different stuff, and Japan started and went around in circles, and now it's finally got it together, and all these different journeys for these different countries. But the point of the story was there was one custodian. It didn't really work that well. I mean, I think actually when we said, okay, we have to plug in to you guys because there's no one else, and we can't get a security token exchange without a custody service. And I think at the time, and these lovely later, it's a company. I'm not saying anything negative, but I think what they wanted us to do, because of what they were initially approved for, was every time there was a trade in the security token exchange, put someone in a taxi and go out to like the Freeport and go into the safe and open up the USB and approve the trade and come back. Like, that's actually what was the discussion like 5 years ago. I was like, how is this? Like, what? Like, this is what we got approved for. And I was like, okay. So you had this situation where you're trying to get these startups trying to do the right thing, use the technology, but then, it's trying to get a traditional license, which had never had this kind of stuff before. So that was one of the big issues over the last couple of years, which is getting sorted and better every day, I guess. But so on that journey, there was no custodians 2018 or 19. Then there was one, and then 2020 there were two, and last year there were four, and now there's like 5 banks have called us this year and said we've got security token custody. So
if I could jump in real quick, Julian, is self custody an option for these?
For us, it is. It is on the primary and the OTC, but not in the exchange. The exchange just, like, as in the exchange, a traditional exchange, order book matching engine. We tried probably for 2 years to work out how you have self-custody. It just doesn't really work that well. It's just too complicated. But on the primary, yes. And on the OTC market, yes. But that was just one, talking about infrastructure. I think that's a good analogy of what happened across all the things, broker dealers, exchanges, like. And at the end of the day, when people were trying to do one service, i.e. with just the broker or with just the exchange or with just the custodian, that doesn't really work that well, because if none of those guys, they might have a business relationship, but if they're not on the same protocols and tech stack, the whole thing's a waste of time. All right. So that was something that we saw very early on, which is why we stuck everything together, which is the longer, harder thing to do. But that's now what we kind of have in the marketplace. And I think on an infrastructure play, yeah, just an evolution across mindset. Technology is getting better, just understanding. And at least here in Singapore, regulators super pro everything. I'm going to say this, probably my position, super pro everything except retail crypto trading. Everything else super pro. Like 2013, the first CBDC projects, we actually won a fintech grant. So the regulator has a fund to invest into projects. And often it's not for equity. It's to just get stuff off the ground. I think it's a $250 million fund. Don't quote me. But anyway, we received a fintech grant to tokenize. So 2020 or 21, the Singapore government launched their first onshore fund vehicle called the Singapore Variable Capital Company. It's to build the asset management industry, take business away from the BVIs and the Cayman Islands and all that offshore tax havens. And we said, well, you've launched this 7 years in production. You've launched this as an equal to everywhere else. We should do a tokenized version, be even better. So give us some money and we'll go do the proof of concept on the public and private chains. And they did, right? And then we had UBS as the fund manager, State Street as the fund administrator, PwC is doing all this kind of work, Tezos and some private Ethereum. And we wrote a huge white paper on this, and now we're productizing this. So, that's why I'm here. It's a small market, but who else can get money from a government to do something that you're trying to do because they get it? That's pretty amazing. So hats off to them. Doesn't change the fact that how long did it take to get our security token exchange? I don't know, 4 year license. I don't know, 4 years, give or take. So there's all, it's all, you know, it's not all super rosy and certainly not fast. But yeah, I think that infrastructure is now here. I mean, if you look around now, there are a lot of people blockchain washing. I'm sure you guys know this. There's probably 8 platforms in Singapore saying they've got tech and licenses. I think one other platform can sort of do what we do, and everyone else is just talking about it on their website. But that aside, yeah, I think, you know, JP Morgan's gone and built their own platform and called Onyx, I think, which is a really interesting touch point, because we know them, called them up. How do we do stuff? What are they doing? What I was told, they're tokenizing a lot of public traded assets. Why? Because they're not very usable, and a lot of them you can't lend on them, you can't borrow on them. So the reason they're doing it is to make them much more multi-dimensional and much more usable, and to plug into the benefits I mentioned before, like the lending, the borrowing, the staking, just the AMMs. So they see it, they get it, but it's a closed system. It's their assets, their investors. Doesn't really do much for anyone outside of that, which is the rest of the world. But it's great to see that happening, because you can start to see that these use cases for where the real goal is far supersedes what still 99% of the market thinks, which is liquidity for liquid assets, which doesn't make a lot of sense unless you talk about which asset and where it trades and how it performs and who can buy it. But no one ever talks about that. They just talk about this one blanket statement. But anyway, I think ultimately there's a lot more banks now offering security token custodian. And there's just a lot better understanding that this is not crypto. But we've got the similar technologies or the same technologies at times. But it's just a different beast. But together, we're going to see, you know, ultimately, I think you're going to see all the banks moving into DeFi products, right? Like DBS Bank launched a crypto exchange here 2 years ago. And again, that was, from what I'm told, was pushed heavily by the MAS here. So that was like a regulator pushing a bank, the biggest bank, to launch a cryptocurrency exchange. I mean, that's pretty forward thinking. And now you've got like Standard Chartered launching, I think, a crypto exchange in London. So you see all the TradFi guys starting to sell crypto. And I'm not sure if you guys knew this, but probably 2 years ago, I think, Bitfinex, FTX, infamous FTX, Binance, all launched security tokens. Even though FTX not much anymore, but even though Binance is a bazillion-dollar entity, they didn't do it the right way. They did it illegally, and then it all came down. So then again, people were like, "Oh, these security tokens are illegal." I was like, no, they're just launching them. But the point of that story is they'll all start adding these assets over time. Because it just makes sense to sell more stuff to your existing user base. So, and now you're seeing interactive brokers now selling crypto and so you'll just see this convergence of TradFi adding the DeFi assets, DeFi adding the TradFi assets in security token in blockchain format, which is security tokens. And I think buyer pool for all this stuff is just going to get, you know, it's just going to go vertical. And all these private assets that were stuck and closed door and all the really boring things about private assets, like how long it takes you to raise money and how long you wait in them and how slow and how illiquid. That's what we're we're focused on changing. Like that's the whole kind of point, I guess.
Yeah, well, that's great to see. It's I mean, just really bringing up the use cases, and obviously, you know, folks that are creating their own use case, and just the infrastructure that's changed over time, and what the interconnectivity is today, and democratization of access, right, for what we can have going forward is pretty unique, pretty amazing, honestly. And then just curious, from what you see as far as different assets being tokenized, is there something that you've seen that's unique that you wasn't apparent initially? That, I mean, everybody talks about, you know, real estate and other different asset classes, right? Is there something that's up on your side that's been kind of threw you for, you know, for a loop initially, or, you know, I'm just curious. You probably see a lot of those.
Yeah. We were real estate only up until we went into tokenization, because then it was like, well, tokenize an SPV or a share of a fund. Well, that could be any fund. So why would we just, and the real estate industry is notoriously slow when it comes to tech. So let's not wait for those guys. So what have we done that's interesting? What we've personally done, we tokenized our ESOPs for our team, which was pretty cool. That's an insanely complicated asset for some reason. It shouldn't be, but it is. But we tokenize that so our guys can trade within themselves and try to not have to wait either for company to fail, which we don't plan on doing, or 10 years till you can get an exit kind of thing. So we also bought a Bored Ape Yacht Club years ago. It's down slightly, but we didn't buy it at the highs. But we thought, all right, let's buy it, let's put it into a Singapore company, let's tokenize economic interest of this. People can buy $1 share of a BAYC. So that was pretty cool. We've tokenized some art for an investment bank. Yeah, there's been some plain vanilla stuff in terms of real estate. We are trying to find super alternative, interesting things. We just tokenized secondaries of an Alzheimer's solution-focused fintech company that's pre-IPO, which is pretty cool. But yeah, I think ultimately what we're trying to do, so what's interesting, so what we try and say is, what don't just bring your paper-based offering and try and do exactly the same. I mean, you can do that, but what's changed then? You know, what's better? What's more interesting? And that's the questions we try to ask our clients, or we try to plant that seed in their head. Use this, do something exponentially more valuable. Understanding you have to walk before you run, and you're a big group and all that kind of stuff, but make it, plug it into the AMM, like make it tradable. You know, do something that adds a lot more value. What I think is the most interesting space personally. So IX Swap started as an AMM, just a tech model, and plugged into other people's licenses. It went and future-proofed its business by getting its own licenses and retail access. So we're just launching now retail investor access, unfortunately not for Americans yet, but everybody else. $1, $1 USDC, you could buy one share of this, you know, $1 billion startup, which I think is fascinating. And we just successfully closing this round. Some people put in $100. It's pretty cool. I think some put in $10 actually. Anyway, the point is that we kind of brought this value proposition. The reason I bring that up is because what I think is most interesting is, first of all, there's I think that focusing on Web3. So there's a fallacy in Web3, or let's call it crypto, that all the value of a project is attributed to the tokens in the system, right? And so if you own those tokens, you know, you're getting paid and everything's great. Well, if that was the case, why is Anderson Horowitz, I always like to pick on them, why are all those guys sitting on the cap table? Like, why are they over there? This is really just a protocol and it's all decentralized la land. Why is someone investing $300 million in Solana on the cap table, right? It's because there's a whole business here and there's a whole bunch of ways to make money. So what I think is really interesting is we're looking for Web3 startups who are obviously the DNA of everything we're about. And we're saying to them, there's a new paradigm for how you should raise money. Instead of $1 million from A16Z, and of course, then they get in on the equity side. And then when you launch an ICO or an NFT, and that's going to continue to evolve and go crazy over time and grow, instead of them getting half the seed round in the ICO and then all the other VCs, and then all the retailers get the pump on the public launch, right? Well, that's the old way of doing things, even though it's not that old, because we've been doing this for a couple of years. What if you really want to build a stronger community and really kind of try to have the most success related to your protocol or platform? Why don't you let A16Z have $250,000 of that round? Because you still want brain power, branding, due diligence, deal terms, et cetera, et cetera. And why don't you sell $750,000 to 750,000 users who all take $1 of an STO? And then also they can start to claim kind of the ICO. So that's real ownership. That's real value. That's because, you know, we all know most of the guys buying the ICO are just a pump and dump. They don't care about the project. But if you actually had them on the equity side, they would care a lot more, right? And there'd be way less chance they don't. But you're actually then truly democratizing ownership, and it's not this half-baked promise of just the tokens or the value, which is just BS, right? So that's what I think is the most exciting and most interesting related to what we're trying to do today. Funds, private equity, real estate, slow-moving beasts, a lot of, obviously, TradFi, a lot of old TradFi guys running those spaces, a lot of issues with adoption, care factor. You know, a lot of them don't care, too rich, too old. The younger, hungry managers are definitely much more innovative. They've got to be, but they also get it. They want to try stuff. They want to add more value. They get, like, they think blockchain sort of essentially could be more transparent and safer than more risky, which is a lot of the old guys think that. So I think ultimately we're not seeing any particular asset moving more than any other. And that's probably not surprising because it's just a better way to issue and hold value, right? So that should be relevant for all the different asset classes out there. But yeah, I want to try to push the STOs of the startups at the seed rounds in a similar way to the ICOs. And we're very vocal about this. We're like, well, because if you think about it, because A, it's super fun. It's a little bit crazy because that's how crypto works. If you can do an NFT or an ICO and take it obviously up, down, and then up again later if they actually build something, why couldn't you do that with, why would an STO operate the same way? Because actually at the end of the day, there's something of more value actually sitting there if the company doesn't go bust. So we're going to try and push these STOs out, the seed rounds, the private rounds, and get the communities excited. Because I also think that a lot of the trading value is completely disconnected from the actual value of the company. And that's true outside of blockchain, right? Like even in TradFi stock exchanges, like why is that trading below book value? Like, I don't know, that's just what it's doing. So hopefully we can be on the fun side and the upside of that. How are these tokens trading like crazy if this company's still in a seed round? I'm like, well, what isn't that how crypto, hasn't that been proven that model actually works in crypto? At least for a while. So we'll see how it plays out. But we're just trying to find really interesting companies that want to kind of push the boundaries and aren't afraid to kind of have a go and embrace it. And at the end of the day, I think those companies will benefit the most because it's essentially new technology. And typically those who invest earlier in new technology get the asymmetric returns, right? So with a few blowouts, along the way.
Of course. Yeah, there's a lot going on there. That was you blew my mind in the whole capital raising process. And you kind of turn that on its head. That's pretty fascinating to hear kind of how you think about it, how your team is looking to kind of innovate and move forward with unique processes around that activity for sure.
Yeah. Hopefully we can make a bit of a dent in that space. I don't think that even though we've got some fantastic VCs, there are a lot of really badly behaved VCs out there, especially in blockchain. So this is better for founders, really is, if you could have a lot more of your real users on your platforms, the diehard guys that don't have hundreds of thousands of dollars, but there's hundreds of thousands of them. I think that's super cool and really kind of delivering a lot of the promise of what blockchain is offering, but often doesn't deliver because of centralized figures and the old world that we're trying to kind of break up.
Absolutely. Yeah. Where do you kind of see what's the client persona look like from your guys' perspective? That's interesting. You're probably seeing many different facets of conversations and things coming your way, different product opportunities across the globe. Just curious.
Yeah, it's getting a lot better. Just as a snapshot, we looked at, I stopped counting. It would have been about 1,500 security tokens. Not so long ago. I mean, from the beginning, we looked at that. At that point in time, we worked on like 2 or 3 because 1,498 we didn't want to touch. So that was challenging. Now it's a different world. You've got listed companies, investment banks, big startups and multi-billion-dollar startups, much higher quality groups coming to the table, especially on the InvestaX side, and on the IX Swap side, we're really looking for these innovative Web3 startups that most people have never heard of because they're very early on. So we kind of have more of a retail startup focus on IX Swap, and then we have, in terms of at least the launchpad and issuing security tokens, and then on the InvestaX side, it's more of the bigger traditional type assets, credit investor type plays, just naturally by its licenses and its jurisdiction and all that. That's where it's going. But yeah, I think if I was to open up, I had it open before. If I open up my our CRM here, it's asset agnostic and definitely high quality. Our job as a platform is to due diligence the issuers and that the fund managers, the asset managers, and make sure they're legally allowed to do their business. We don't do due diligence on the asset. That's not our value proposition. But certainly the contracts that are being signed now are night and day better on the quality of companies than they were even December last year. Like, okay, to say last year, it's night and day, and that's helped by JP Morgan and BlackRock and tokenized securities of the next generation of securities, Larry Fink, and bring more of that, because that's the financial institution third-party validation that this stuff is usable, is valuable, and you can do it. And that's all now starting to really ramp up, which is great. So that's kind of what we're seeing right now.
In terms of, one of the things that you mentioned STOs. Do you see kind of, I would think, especially for like these Web3 companies, like the process of IPOing, going live on a NASDAQ, it's so expensive. It, almost wouldn't make sense when you could tokenize, kind of a security like that. So, do you see that kind of, ramping up in the future as more companies come to market and as legalization, different things change?
Yeah, yes, I do. And how do I frame this? I think that, so only the biggest and the best startups get to NASDAQ because it's a scale thing, right? Market making, investment banks, etc., to get the benefits of, call it, tradability in public markets. Now, I think any startup can have some of those attributes. Of course, on InvestaX, we're nothing like NASDAQ yet. But being able to, actually, you could kind of do the similar things, right? Because if you could tokenize and you could lend and you can borrow and you could plug it into an AMM and create a liquidity pool, you can start to see the similar attributes or the similar benefits of publicly traded assets for these private market assets at a much, much, much lower cost. Of course, much, much lower liquidity probably to balance that out. But yeah, I do think so. I think there's a lot of questions from founders about, what does this mean, right? What happens if my stock trades 100x higher? I don't know. That's what happens. What happens if it's 100x lower? That's what happens. Like, that's got nothing to do with blockchain. That's just like, how do you see that? Like, okay, go buy it back if it's 100% lower than what its value is, or if it's up higher, go raise money on this new valuation. You can take a perspective, positive or negative, on all of those elements. I think humans are generally followers versus leaders. So the challenge of the last couple of years has been no one wants to be first, everyone wants to be second, right? So we're now in the second moment, whilst the whole industry still kind of builds up. So I think that more and more companies will do this. There's a lot of experimenting to be done. We're now doing seed stuff. We just did the equivalent of a Series E type offering. We haven't done A, B, C, D, E yet. Will it change? Will it be different? Probably. What's the answer to that? Don't really know right now. Everything will be asset specific, I think. Project specific, right? How's it performing? How's it doing? I think there's a lot of interesting things you can do with tokens to mitigate some of the concerns. And I call it the founders, right? Because investors and founders probably the same thing, but the founders are the guys going to make the decisions, or should be the ones making the decisions, and the guys and girls. So what do I mean? I just mean in terms of, buyback mechanisms, this, that, and the other. I think there's interesting things you can put into a structure of a token that might mitigate all these things. Like, for example, like, what happens if we want to go on IPO one day, like an old school IPO? Well, I don't know, have a buyback mechanism. Well, how's that going to work? I don't know, put it 5% above last traded value the day you want to buy it. I'm just giving examples. So there are ways to put some framework, I'd say, or some safety net around, this is new and where we're going. But yeah, I think I think you guys agree. I think this is all inevitable. So it's just, you can either dip your toes in, get started, try some stuff, works, doesn't work, feel it out, regroup, go again, or you can sit on the sidelines and miss the whole thing. That's kind of where it's at. So we're obviously on the forefront of trying to push that out there. And I think, I think we'll see what I've been saying for years, which is becoming true. I've said for years, security tokens will probably save ICOs. Why? Because if you launch a security token, how can the regulator argue that your ICO is a security token? Because you're like, no, here's a security token. This is what it does. This is what it owns. We did it properly. And this token here doesn't do any of that. So you can't actually argue that this is a security token because we've actually got one. That might become more true over time. But more importantly, it's technology. like technology ever evolving, and it's wrapping and it's investment structures where there's money to be made. So this, back in 5 years ago, there were no NFTs, there were no DAOs, there were probably a few other things out there that weren't known. We said that's just going to keep, in my mind, that's just going to keep going and iterate and change and get more sophisticated and all this kind of stuff. So we don't even know what's going to come down the pipeline. I think that's something that I believe in a positive way. Like right now, we're kind of building into this big blue ocean opportunity. But I think what's exciting is that, we will come up with completely new types of ways to invest into traditional or non-traditional assets. We'll dissect. There'll be just so many exciting investment products that everyone, in brackets, can finally access. And I think that's really exciting. And I don't think that's ever going to stop. And even if they come back looking and feeling like the last version, but it's changed a bit, that's still different. And that'll still be the next version of the NFT or the next version of the DAO, the next version of security tokens. So I think that's proven, at least in the last couple of years, to be true. And it's probably true. It's proven all the way back to Bitcoin being the first, and then Ethereum, and then 50 million altcoins and all this kind of stuff. So I think we're in the most exciting space in kind of finance, and hopefully it keeps growing.
Yeah, definitely very exciting just to see kind of, like you said, the speed of change is crazy in our space, right? And I always kind of say, it's like you're a pilot getting in a plane, but you're only plotting a part of the flight path because you don't know what the rest of it is, and you're everybody's getting on board together, and we're going to figure it out, right?
Yeah, that's
whatever
right.
happens, which is kind of exciting and scary at times too, but obviously innovating as well as you move forward, as things, minor course corrections, things happen, challenges, opportunities all fall on your lap one way or the other. I'm curious, just as you talked about different opportunities on your guys' side, Web3 startups, others coming your way. What is, I mean, again, I'm sure it's project specific, but the time frame from tokenization to launch, what does that look like? I mean, up and running.
Yeah, it's definitely asset specific, because it's asset and company specific. Why? How fast does the fund manager move? Right? They might call us every single day, or it's a month between their internal investment meetings. One example is we've tokenized economic interest of a Singapore PTE Limited, proprietary limited company. Why? Because it's a great structure for equity tokens. Why? Because you can issue unlimited amounts of economic interest tokens, but they're not the same as equity tokens. So today I'll just simplify it. So it just means that Skylar has a PTE company. He's the ultimate beneficial owner. He does 1 million economic interest tokens. There's 1 million people give him $1 each. Every year you go back to reporting, you report Skylar's the shareholder. That's it. Right. So this is a common law thing, a common law structure, I should say. But as one example, just as how long does that take? I've done that with the smart contract, but a structure now. You could set up a PTE company today in Singapore. I could literally issue those tokens tomorrow because we've done it. Right. So once we start replicating and reissuing similar things, and there's a smart contract order. So yeah, like we're now, again, that's taken a long time. It's tens of thousands of dollars of legal fees and all that kind of stuff, but we've got it all now. We actually offer that all to our new clients right now to try to build up the industry and our business. You want to come and launch on our platform, we'll invest 50 grand of smart contract audits, technology, licenses, legal contracts, if you do this structure, because we've already done it a couple of times now. And it's all been validated that it works and it's interesting. So yeah, so it's anything from very fast to how long is the piece of string related to the clients. And a lot of people come and they go off and they speak to 10 other platforms and they get very confused, or they get told true or false statements, and they either get lost in the abyss or they come back and say, okay, yeah, it sounds like you guys know what you're talking about. Let's do it. So it's very diverse, I'd say, in terms of there's no time, there's no formula for this yet.
One thing I kind of think about is, in terms of like real world assets, the sense that, I think with an NFT it would make a lot of sense because there's, you could set up like smart contracts where there's rules in place, like maybe, a certain number of, investors need to vote for it, as an example. Let's think about like maybe like a piece of art or like a piece of real estate, like, I want a piece of the Mona Lisa and I invest in it and then somebody steals the Mona Lisa. Or, you want a piece of my house and, you have the piece of the house, like technically as a token, but I go and sell it from under you. How do you think about that kind of stuff?
Good question. I think that nearly all security tokens will be issued, bought, sold, traded on platforms. Why? Because how do you buy Apple stock, and without decentralized exchange land, how did you buy crypto, right? The whole private key, not your keys, not well, it doesn't have that problem in securities tokens. And who wants to deal with this stuff, right? So the reason I'm saying this is because I don't think it's that attractive, easy, or anyone's really going to be able to go and sell these security tokens to random people. Say you can certainly block that with whitelisting, KYC functions. The challenge, it's a great question. I was just talking about this last night. The challenge with security tokens. So anyway, so the point is, I think that you'll just be buying and selling through platforms, and it'll just be because of the UX UI, because of the user experience. That's what people want, and therefore you can't buy and sell on InvestaX unless you've been KYC'd. So the chances that a user sells to an illegal person is almost zero. I'm just going to say almost. It should be zero, but it's pretty much zero. But the point is, I think it's like, well, when the thing that we're trying to push is on the smart contract standard format. So the reason why Uniswap works so well is because everyone, or a lot of these DEXs work so well because the smart contracts are just very simple, right? ERC20. And so when people started thinking about security tokens, they started thinking, you can't have this, you can't do this. The point that you're bringing up is kind of the main problem with, call it ERC20s for security tokens, which is you can transfer to anyone, right? That's the nature of the standard. But so that's really the only problem, because you want everyone issuing on the similar standards. Now, other people are building their own little smart contracts, but again, it's kind of like a private chain. It's like my KYC, my this, my that, or try and capture your business. You kind of think you're being intelligent because it's a business model play, but it's just going way back into TradFi land, complete centralization, my way or the highway. Again, it's a big world. There's place for both, but to your point, like, the way that we think about it is just like, I'd love if everyone just used ERC20s. Okay, the function of being able to send to anyone. Why would I send my equity to someone? Probably just to make money, right? But okay, you could do that. Maybe you take it in your own wallet. Maybe you sell it to Skylar for $1 million and it's worth $1. And then Skylar comes back to it and says, the only way to get paid out is on our platform. Well, he knocks on the door and says, I've got a token. We shouldn't have one. We need to KYC AML. Okay, well, then you bought it illegally from, whoever. And that's kind of your problem, right? We've said in the agreements and the user that you can only buy these things from a broker dealer. If you do it, that's illegal. So again, it's kind of like forgetting tokens and blockchain. If you bought a share of a company and it said you can't transfer it without founder's approval and you go transfer to someone, it's just illegal, right? So, a lot of the things people are worried about have got nothing to do with blockchain. They've just got to do with agreements and law. But so at the end of the day, I think, the goal, I think, is use public protocols to issue these tokens on the most simplified smart contracts standards that where there's basic KYC AML required so that the owners of the asset know who owns it. But then you launch on 5 different platforms around the world. Like, you could finally do that, right? Which you'd never, ever do before. If those platforms have the same technology stacks and if there's a business agreement that makes sense. So I think that, and I don't think there's, at least on the primary, that's 100% doable, right? To do $1 million in Singapore and London and New York. Secondary trading needs a bit more, it's more complex, especially when you're thinking about market making liquidity. But from a primary issuance, sure, start to then actually see platforms working together, launching these projects globally for really kind of for the first time, that an issue in those countries, potentially even in SPVs that are needed for those citizens for tax purposes. That's the goal. We're not there yet, but I think we're moving towards that kind of that space.
a lot to think about there. Just the future, 6 months, 2 years from now, where will things be? Makes you think about a lot of things as changes happen, as you said, real time, quickly.
Yes, that's true.
In terms of liquidity, I'm really curious about that because you mentioned it earlier. I'd love to dive into liquidity. And what are you guys seeing on the liquidity side? Is there demand for these assets? Is there, or how do you kind of see it playing out as time moves on?
Well, we built IX Swap because there was no liquidity solution. Everyone's talking about it, but there was no market makers because the crypto market makers can't make securities, and the securities guys are trying to work out blockchain. I think they're all coming. And again, the first assets in the space are not so much exchange traded products. So that needs time for, call it, traditional market making on security token exchanges in the way that a stock exchange works. But for us, we built IX Swap to be market making for the security token broker OTC listed tokens, which could be anything. And so that's the best we could do on top of everything else we're doing to try to help bring a solution to that space. I think, we actually have our own token, IXS token, which trades on exchanges. And we've seen that you don't necessarily need a huge amount of, pending let's call it the quality of the market making services. You don't typically need huge liquidity to create decent liquidity. Let's just say that. Again, totally depends on the asset, numbers of buyers, how you're doing, the performance and all that stuff. So I think we as a business are trying to get people to see far beyond this belief that tokenizing anything just magically creates liquidity or at the primary or the secondary. But there's now systems in place to do so. It's all trending and momentum in the right direction. And there's going to be more evolutions, right? So IX Swap's one of the latest and greatest. Hopefully other people do other interesting things and bring more infrastructure to the play. So, as to what Skylar said before, we're building into a lot of unknowns, but known is that where there's a need comes a startup, right? I think that's how I think about it. So I think there's probably 100 different startups out there that I haven't met trying to work on this particular issue as well. And so, I think, look, ultimately, and then the response also is, well, this might be, okay, this sounds good, looks good, this is working, that's a bit of a great part, whatever. I'm like, whatever that is, it's 100 times better than what you do before, which is pretty much nothing, and issuing on pay, like the traditional way of issuing and raising capital. All of this is +1 and plus a lot more than that. So that's kind of how I think about it, kind of practically. But so I think ultimately we will see. There's a lot of money out. There's a lot of market making businesses out. There's a lot of crypto guys. They feel these guys get licenses, and then bang, you've got you've got some big crypto guys that understand the tech that are now into the marketplace. And then same on the TradFi side, they're going to want to expand their businesses. So traditional market makers are going to want to work out how to become the tokenization market makers, just like the lawyers are trying to work it out. The KPMGs and the PwCs, like, how do I do my consulting services for tokenization? The tax guys, how do I become a tokenization tax expert? So, there's natural forces of business, I think, commercial interests that will solve problems that aren't necessarily solved today.
100% agree. That's great. Yeah, absolutely.
Cool. This has been great, Julian. Any other questions on your end, Skylar?
No, I have a bunch, but I mean, it almost could be like a 3-part episode series here. Going down the rabbit hole of the secondary markets and other things that we cover, but that's for another time.
I speak very fast and I've thrown a lot of stuff out there, but look, happy to rejoin again. Appreciate you guys having us on and spreading the good word of security tokens and everything around that. If we can help with anyone on issuer or investor side, I'm sure we'll put our logins on the notes, and and we should do this again a little bit later down the line and see what's happened as this super fast-paced space gathers more and more momentum every day. I'm sure there'll be a lot to talk about any day of the week.
Absolutely. We'll definitely check in with you again soon. Where could people go to connect with you and learn more about your companies?
Yeah, so InvestaX .io, IXSwap.io. You can register on the platforms. Myself, I'm probably most active kind of on LinkedIn. I don't really have Facebook or have time to do really anything else. So if you join our LinkedIn company page, yeah. If you join our LinkedIn company pages, if you want to follow socials, I think that's the two simple paths forward.
We'll make sure to include all that in the show notes.
Thanks again, guys. Appreciate it.
We hope you enjoyed this conversation. Please make sure to like and subscribe if you find this information helpful. Reach out if you're interested in starting a fund, a hedge fund, VC fund, whatever type of fund you're thinking about, and let us know if there's any topics that you'd like for us to cover. Thanks for watching.